Hey, hey. What's up, Tate? What's up, Avery? Eddie? What's up, Nick? Good afternoon. Haha, there you go, Brant. All right, let's hop in. Today is Wednesday, April 19th, 2023, 10 after 4 Eastern Time. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, back in Roku, pretty small. I think that's the only change on here today. All right, so we'll do a shorter afternoon meeting today because we're going to have Dan Darrow on the Conversations with a Pro Trader at 4:30 on LinkedIn. Definitely recommend everyone checks it out. I've been enjoying these now weekly sessions that they've been doing. It's cool to get some different perspectives. I think it's good for all of us to get some different perspectives. Honestly, it also gives me a little bit of a break, which is nice on Wednesdays here. So we've got 15-20 minutes or so. So let's do an abbreviated meeting. How did we close today? SPYs closed down 0.1%. It was actually a really pretty flat close today. Yeah, we closed pretty flat. I think we downticked after hours a little bit. Qs here are down 0.14%. Same thing, really flat close. We're downticking a little bit after hours. And the IWM is up 0.1%. So we got a little bit of outperformance from the Russell to a small degree today. Today was a good day. I always think that buying these gap downs is scary sometimes, even when I'm saying it in the morning meeting. But all we can do is the right things technically. It was particularly scary today because you kind of had a failed breakout yesterday. I guess you could argue it's not a failed breakout because SPX never really got above 4,200. IWM never really got above 180. So we never technically broke the breakout levels. You don't have anyone trapped. And in those false breakouts, you can get people trapped, and that is what tends to lead to bigger moves to the other side. Yesterday was really more of just testing resistance. Things were looking decently bullish technically, and you need to contact the trade support team. You need to contact the trade support team. Call them. You need the phone number? I can look it up. One second. I should probably have this number memorized by now. I'm typing it in. 646-346-1710. Yeah, market orders don't work after hours, so if that's what you're doing, that's the reason. But you shouldn't be trading after hours if you don't know that. Anyway, Tesla's finally taking a little bit of a downtick here. So, yeah, like I was saying, always a little bit scary to kind of buy these dips. You see the market's down a decent amount pre-market. You think the market's down for a reason. Probably there is some sort of reason. Maybe something happening overseas. And it's very hard to come in sometimes and just kind of buy that. But you got to think about the big picture. And the big picture is that we are in a bullish market. We're uptrending here on the SPYs. It's a gap down to the 80 MA on the daily chart. It's a gap down to trendline support. It's a gap down to an area where we have technical equilibrium, and it's a common gap. Common gaps tend to get filled. So the initial thought process on a common gap down in a bullish market, especially when that common gap down doesn't make you extend it anymore, it's something that you want to come in and buy. So that was more or less the game plan today, was to come in and buy. I was buying some stuff pre-market. I was buying some stuff at the open. It generally all worked out. I didn't do anything too aggressive. I did you know, of course, whenever we have any of these big gaps, I want to see how the market handles that gap. I want to see what we look like after, you know, 15, 30 minutes when we are, you know, testing this ADMA for the first time. That's the big signal there. And for the most part, you know, we got an easy bounce here in the first 5 minutes. Easy bounce for the SPYs, really easy bounce for the Qs, IWM. IWM actually bounced pre-market. It bounced when we were doing the morning meeting and then was weaker at the open. But for the most part, that was kind of the easy money, was that first buy at the open. We got that bounce and then really went sideways here for a while, which is technically bearish. You're starting to digest the bear flag. Sorry, you're starting to digest the gap down through time, which I wouldn't describe that as a bear flag. I would describe that as a bearish consolidation. And when the ADMA catches up to the base of that bearish consolidation, then you start to have a decent probability of a breakdown. So I remember saying as we were approaching 10 a.m., like, ooh, you know, we've been going sideways here. This ADMA is catching up. I'm a little bit nervous. This 10 a.m. candle was decent. We started to bounce up. We were testing that ADMA. And this was like the real prove yourself zone for the market is what I kept saying. We at this point need to see, well, can we really break up above the intraday resistance that we've established in the first 30 minutes? Can we get above that ADMA? And if so, then maybe we can get correction from a 15-minute chart. If we can get correction from a 15-minute chart, then we can look for further continuation for a gap fill. But this was kind of the do or die period for the market here today at 10 a.m. At 10 a.m., we got this nice bounce into the ADMA. We easily could have tailed heavily off that, came back down, tested support, and then broke down. And that would be the playbook, honestly, in a bear market. In a bear market, you look at this gap down and you go, ooh, I'm interested in shorting, but I don't want to chase the short. You watch it for 30 minutes, you see this bearish consolidation, you see the ADMA catch up, and that's when you look to really begin to execute your shorts. But we're not in a bearish market. The S&P has been trending. It's been very strong. The NASDAQ is back in its range, but overall has been very strong. The IWM has been a little bit more difficult. You know, this Russell just can't seem to kind of break out and get a little bit more bullish. But the Russell was showing some relative strength pre-market, which is maybe an extra added layer of probability that we can break up. And then we did. You know, I didn't love the idea of putting on new trades at 10 a.m., but shortly thereafter, the market started to confirm it was breaking up, and then, you know, we spent the entire rest of the day grinding higher. So, you know, really the game plan today was to kind of buy the gap down. If you're able to do that in some of these stronger names, it worked out pretty well. And I was able to do that in some things. Some other things I was looking at I didn't quite get filled in. Bank of America, I was bid like, you know, $29.75. I didn't quite get any stock. It wouldn't have been a huge winner anyway. It didn't really work its way up. But, you know, other names were pretty good. Apple, you know, I mentioned it in the morning meeting. I actually would have liked a little bit of a lower price in Apple than it actually gave. Lows 165.54. Would have liked a little bit lower than that. You know, maybe closer to like 165. But this was like one of the stronger ones. This one in Amazon right off the open, they were extremely strong. You know, just keep kind of mentioning the anecdotal evidence, and I don't know if it's just me, about the savings account thing that Apple opened up. It seems like there's just a massive amount of demand for it. It's so interesting to see Apple kind of breaking out into banking a little bit further. So Apple just tremendous. Amazon was super relatively strong off the open. Might have been a little bit difficult to be able to get some stock. You had some weakness in a Microsoft. Microsoft I was buying around that 285 area, so that one worked out well for me. You had some weakness in certain parts of the day in Meta. Meta didn't quite get down to where I wanted to buy it. I would have been really interested in buying some stock on a deeper correction in Meta to 210. Google was tougher. We talked about it. Google long back through 104. That might have tricked some people in off the open on this first tick through 104, so I hope no one got in trouble with that. But 104 is an important level. This is a hard buy, though. When it snaps back $1 like this right into the ADMA and now you're buying 104 is really tough. If you're able to be a little bit more patient, if you took it around 11 o'clock, which I don't love that time of day, it was a little bit better of a trade through 104, but probably nothing to write home about. So the big tech stuff was pretty decent. Morgan Stanley, we mentioned $88. as an important level to pay attention to. It held his resistance once, then it blasted through it, kind of retested, held his support. That was decent. I didn't trade it. It was a little tough, but worked out pretty well for the most part. I was planning on not trading Netflix today, and then Josh got me into some Netflix. Josh had some great calls on Netflix today. Called the initial short off the open, then I think he flipped long on this quick upside tail, and then the trade I got involved in was when he called it off this hammer low. So I bought some, I think I bought some 318 on the way up. I had a bid to average down at 317 that never got filled. But that low held, it tailed up to this 322.50 like 3 different times and was holding that as resistance. I was selling the vast majority of what I had by that high, and then I ended up holding a little bit more for this tick back to highs, and I liquidated my position into 325. So shout out to Josh for getting me involved in a trade and a name that I probably was not going to be involved in otherwise. So that was not bad. I bought a little bit of the dip in the morning in pins, made a couple bucks in this, liquidated the position. I bought the dip in S, liquidated that position, made a couple bucks in it. Only one I'm down on today was just Roku. Roku was really frustrating. Yeah, Roku was frustrating. Roku ended the day down more than Netflix, generally off of Netflix earnings. Yeah, I don't know what else to attribute the Roku weakness to. Roku down 4.6% today. Netflix down 3.5%. At one point, some of these growth names were generally weak, which I thought maybe was weighing on Roku a little bit. But they recovered. You know, most of them recovered. If you look at ARK or you look at Shop or DraftKings is up 2%. Most growth was able to really recover. Roku did not. So I always find that really interesting when you get that situation where like the secondary name is up or down, in this case down, more than the primary name. So yeah, I traded this Roku a little bit. I had one okay trade on it off like 62 here, but I finished down in the name today. Which is what it is. Just interesting to see that's down more than Netflix. Roku's sloppy on the dip. I mean, Roku's range bound on the dip. Roku's paid me very well in this range, to be totally fair to the stock. Generally, I've been buying this thing every time it gets into the low 60s and selling it in you know, the 65, 66 area on the way up. And it's just treated me really, really well. I've been doing it very consistently for like a couple months now, it seems like. And it's been great. So maybe I jumped the gun and bought Roku a little bit too early today. I was kind of trading it a bit off Netflix, and it just ended up being kind of relatively weak, and I couldn't sell some of the stock I wanted to sell in some of those moves. So it is what it is, but pretty much everything else I was involved in today worked out pretty well, and kind of the general game plan of buy the dip in a bullish market, buy the gap down in a bullish market, worked out just fine. And I think that's it. So we got a couple of minutes before Dan Darrow, so I'm happy to answer any short questions that anybody has, and otherwise I'm gonna wrap things up. From Rich, if we call 2 inside bars a shooter, then what do we call 3 in a row? For example, the QQQ 15-minute chart. Yeah, we don't really have a name for it. To be honest, you don't see it that often, 3 or 4 inside bars in a row. I would just call it, 3 inside candles in a row. But obviously it represents a further tightening pattern. So, that's a good question. From Rex, looks like a long question. I'm going to have to give you the short answer. Let's take a look. Traded NVIDIA on the long side at 11:38 before the candle closed. Okay. Before the candle closed, when NVIDIA sold off from 276.89 to the low, and then pivoted back up. So the low's 276.44. Sorry, and then pivoted back up yesterday's close and turned green. At the same time, I saw the market rip higher. At the same time, I saw the market rip higher, so I got long. All right, let's confirm that. Yeah, market had an uptick to highs at that point. NVIDIA was relatively strong. NVIDIA then followed by 2 inside 5s and started to trend higher. Yeah, inside 5s. I mean, look, don't overread an inside 5 at almost noon in the midst of a stock that's been moving sideways almost all day. That's a recipe to not be consistently profitable. You know, like I say all the time, you can't trade every inside bar, especially in these small time frames, and expect to make money off of it. And I see it does go higher here, but I don't love that as a trade. Yep, here you go. I know you're going to say I don't like the time of the day. However, considering the market rip higher at that time, would you consider adding on the inside 5, or the actual trade would be the inside 5? I honestly wouldn't have taken any of those trades. I wouldn't have taken the long where you got long. I wouldn't trade those inside 5s. I just don't like the time of the day. I understand the relative strength. I understand that the market's ticking higher, but this thing's also run into like a bunch of intraday resistance. And whereas it was relatively strong off the open, the Qs had been grinding higher here for a while, and NVIDIA wasn't breaking out on the intraday. So I don't know. Maybe it's just my dislike of the time of day, and it feels like you're kind of forcing things on very small time frames to me. I just generally don't like, unless there's a real news event going on, trading like 5-minute charts at around noon. So I don't love it, but I get it. You know, you're seeing relative strength in NVIDIA overall. The stock is more or less green. The market's moving up. You think you got a little bit of a setup here for a higher low for continuation. I'm fine with it. I don't have a problem with you taking it. I'm just not going to take it. You know, maybe you can scratch out some money for yourself on this sometimes. Other times you won't. Just make sure you don't overly force things at that time of the day. All right, I'm not going to do your second question on UAL. I apologize. I don't have time, and I want to give Anthony a quick shot to take a quick look. Tesla at the inside bar at 950. Was going to buy off of that, but my rules told me not to. The Qs still gap down. 5-minute ADMA caught up. And earnings day, the only layer of probability I had at the time of the day, so I passed on the trade. Stock went up, but I stuck to my rules. I mean, that's a great job. You know, follow your rules first and foremost. I do remember pointing out around 10 a.m. that Tesla should have been down more, like air quotes, should have been down more. It's holding below 180. It should be going down more, and it's not. So sometimes that's a signal for the other side. That's eventually what happened. And now we've got Tesla down decent here after hours, off 5.5%, trading at 174. All right, so I'm going to wrap things up there. I hope everybody had a good day. Hope everyone tunes into Conversations with a Pro Trader on LinkedIn for Dan Darrow. I will be, so I'll see you there.